Shares of Zoom Video rising on better than expected second quarter sales and earnings. The company also raising its full year revenue and earnings per share forecast, pointing to growth in products for big business. Joining us right now is Zoom CFO Kelly Steckelberg. And Kelly, welcome. Glad to have you on the show this morning.
Thank you. Good morning.
So one of the things you all have been able to do is come out with new products and services that have helped keep people around even while so many people went back to work. Why don't you talk a little bit about those products? What have been the most innovative? What have helped?
Yeah, we are thrilled with the continuing expansion of our portfolio. Of course, we have Zoom Phone, which is our cloud PBX solution, which has been a real propellant to our growth over the last several years. We recently announced Zoom Contact Center, which is also our cloud-based contact center solution, which is natively built and seamlessly integrates with the rest of our platform. And then, of course, we have many solutions to support this hybrid work environment that we are all facing today, including things like Intelligent Director, which places multiple cameras around a room so that when you're working remotely, for example, and there are others in a conference room, you can still see everybody's face on the screen on an individual square, which is something we all became very accustomed to during the pandemic and working remotely. And all of these solutions are doing a great job of keeping workers and employees, whether they're in the office or remote, connected in a very seamless way.
Hey, Kelly, I'm looking at the stock, which is right now indicated up by about 1.8%. So indicated up, but earlier it had been indicated up much more. I know earlier this morning it was 4%. I think last night after the bell it might have even been 8%. Part of that is some of the analysts are weighing in at this point. And just running through the price targets, a lot of companies, firms on the street have actually cut their price targets this morning. Baird went to $90 from $95. Wells Fargo went to $75 from $80. Bernstein went to $82 from $92. Obviously, those new price targets are all well above where the stock is right now, but they are moving things a little bit lower. And maybe part of that is summarized by what a KeyBank analyst said, where he said that the company is facing downsell pressure among some of its enterprise clients, meaning that some of these enterprise clients, because they have so many people back, might say, OK, we'll continue to work with you, but we want a cheaper price overall for what we're paying for. Are you seeing that at this point?
So we were really pleased with our Q2 results. We beat on both our top line as well as our profitability numbers, and we raised our full year outlook for both revenue and profitability as well. One of the things that we did talk about with the analysts in our call last night was the fact that we have seen, given the macro environment, some of our customers that potentially have seen dislocation in their employee base wanting to potentially reduce the number of meeting licenses they have. But we're taking that opportunity. Our team is doing a great job of sharing with them the value of the broader platform that we just talked about. So taking the opportunity to talk to them about how they can have savings if they were to convert from on-prem to Zoom Phone, for example, or how Zoom Contact Center could be the great next generation contact center for them. So what we've seen is this evolution of our customers as they are expanding in the platform, potentially right-sizing spending in some areas, but expanding that in others. And I think that's what he's referring to.
OK, I'm not sure I understood all of that. Zoom Prem, I guess, is Zoom on the premises for work versus Zoom on the phone. So companies are looking for ways to say, hey, we're not using it the same way we were during the pandemic. We'd like to reduce the number of licenses or how this works. Explain that a little more. Is it something that the analysts are justified, you think, in taking down their numbers, or you think that they are taking something you were giving them a little insight onto and maybe running a little further with it? What
we've talked about is many organizations have experienced a reduction in their employee numbers over the last several quarters, given this macro environment. Mm-hmm. And so they might want to have fewer meetings licenses, but we're taking that opportunity to share with them how they can have savings across the rest of the Zoom platform, buying Zoom Phone, buying Zoom Contact Center, expanding Zoom Rooms as they are welcoming their employees back into a hybrid work environment. So that's what we've seen. And I think that's what the analyst is referring to is while we may see reduction in certain parts of a customer's spend, we're taking that opportunity to help them expand across other aspects of our portfolio.
With other products and things that are there. So overall, are enterprises spending more or are they spending less? I know you've expanded the number of partners you're working with. Is their spend up or down?
Yeah, overall, we've seen our customers spending equal or more. And that's evidenced by the growth in our revenue, both from an online and an enterprise segment. And then something that we look at, which is a metric of how our customers are spending last year versus this year. And that's over 100%. It's our net dollar expansion metric. And so they're spending.
That's it. If you break it down per customer, are enterprise customers spending more? Or is it that you have more customers who have come in?
Our enterprise customers individually are spending more. And that's what that net dollar expansion metric measures is customers a year ago as compared to the same customer base today.
Great. I understand. Thank you. Kelly, let's talk a little bit about what you guys are doing, too. It made news earlier in this last month when you all said that you wanted your employees back on premises as well. That's just part of the reality, what companies everywhere are dealing with. It's a little different when it's Zoom itself doing it, and I think that made headlines. How's that going so far?
It's going very well. We believe that a structured hybrid approach works well for us. It's great for collaboration. We hear from our employees. They want to see each other. They want to see their friends and colleagues. And so doing it in a way that ensures when they go to the office, their friends and colleagues are going to be there. And it's great for innovation. We are in the best position to leverage our technology, as I talked about, Zoom Rooms, making sure that it's working well to support a hybrid environment. And so we've asked our employees that live near an office to come in just 2 days a week. And this doesn't mean that remote work is not still part of the future. Approximately 65% of our employees, in fact, are still remote. 35% live near an office. And so we believe this is a great balance and allows us to keep our workforce connected and keep us innovating.